Okay, good morning, everybody. Tuesday, February 9th, 2021. Stock market today. This is Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo _CMT. Stock market today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider. Not advice, never advice, just consider it. Do some work. Hit your inbox every trading day before the market opens. U.S. equities higher on Monday with all major indices at new records. Energy, tech, and financials outperformed. Utilities, comm services, and healthcare lagged the broader tape. Treasuries were mixed with the curve flattening. The dollar was weaker against the yen and the euro. Gold was up 1.2%. Crude oil up 2%. 6-day winning streak for crude oil, although that is being threatened here this morning. We'll chat on that in just a moment. Leading sectors yesterday, energy, fins, tech, industrials, underperformers, utilities, only group to finish lower, healthcare, REITs lagged. Defensive groups lagging and an up tape. If you're bullish, you like to see that. As we get to the desk this morning, futures are down 10 basis points. 6-day winning streak for S&P. Up all 5 days last week and the start of this week. And that's after Asian markets were lower overnight. Asian markets were higher overnight. China gained 2%. European equities are trading lower here this morning. Treasuries are stronger with the curve flattening. The dollar is under pressure against the yen and euro. Gold is up 60 bips. WTI crude is down 20 basis points. To kick us off on a Tuesday morning, we're going to look at sector relatives in my note today. You know it. Every Tuesday we do sector relatives. But before we get there, I thought Groundhog Day was last week. Being a little facetious, obviously, and I never take the markets as a joke, but I mean, 6 days in a row, record highs once again. I'm tired of writing the same thing over and over. I guess I'm not tired of it because I'm bullish and the trend is up. So I guess that makes me right. If you've been bearish, you've been wrong. It's okay to be wrong. It's not okay to stay wrong. How long have you been bearish? If you're having that, that's a conversation you need to meet. Or, if you're reading analysis, how long has that person been bearish? They just turned bearish? Okay. They've been bearish for months? They're wrong. S&P support 360 to 370, then 340 below that. QQQ 315 near-term support, then 300 is important. IWM 190 to 200. Then 160, 170. Above 340 on the SPY, we're playing for 413. Trend is up until proven otherwise. Again, if you're anything other than bullish on equities in the U.S. as an asset class, this chart here is your scoreboard. If you're bullish, you're Tom Brady and Gronk. If you've been bearish, you're everyone else. It's that simple, folks. This is the scoreboard right here. Dig in, do the work, find the trends, find the leadership, find the outperformance, quality stocks and quality areas of the market. But at the end of the day, if you're bullish and the price goes up, you're right. And if you're bearish and the price goes up, you're wrong. That's why we manage risk. You're going to be wrong a lot. Adapt, adjust, reevaluate. Let's take a look at our market in a minute now. What are we writing about in our note today? Well, major averages continue to close at record levels. I think we hammered that point home quite clearly. Leadership is interesting here. It's a mix of the cyclical and the secular. In my note, I include a bubble chart of, where we are in respective trends. And it's interesting to see where the leadership is. It's your secular winners, things like tech, areas of discretionary comm services, right? And then all of a sudden energy and fins, right? So it's this cyclical, secular leadership. I think it just speaks to the broadening out. And that all plays out while traditionally defensive groups lag. We'll look at that. Found a new ETF that's interesting to me. At least it's new to me. I hadn't seen it before. I was looking at something else. AI and robotics are a bullish trend to start the year. So that's kind of interesting. We'll look at that. Futures point to a lower open here today, as I said. Let's look at the major indices from a power bar perspective. Solidly bullish. 10 to 3 bulls to bears on the Dow after adding 75 bips. S&P 500 adds 72 basis points, 156 to 45 bulls to bears there. NASDAQ 67 basis points, 24 to 11 bulls to bears. In up tapes, we've been seeing small caps lead. Walk me through how that could be bearish. Up 2.5% on smalls, 835 to 57 bulls to bears. There, bonds uptick, sending yields lower. Energy, your best group, up 4%, 4 to 1 bulls to bears. According to the Chaikin Power Bar, small cap stocks and large cap stocks strongly bullish. It's in our stocks of the day. We run our screens now. Bullish screen on Tuesday, bearish screen on Thursday. This week we are looking at keeping it pretty simple. I like this screen as a starting point. I stress starting point for a research process because we always talk about the importance of relative strength, right? It's not enough to just be bullish. Bullish stocks go down all the time. We want to find bullish and leading. That increases our odds, right? The concept of momentum, especially relative momentum. So I love this screen as a starting point. I would never just go out and buy a stock just because it's on this screen. That would be absurd. It would also be lazy. Start with the Russell 3. Give me bullish and very bullish stocks with strong money flow, right? That means they're under accumulation. And give me relative strength, turn strong this week. These are potentially new leaders. That's an interesting screen to me. So I ran it today. It's in the node. It returned 25 names. That makes sense. And you know what's cool about this is you can pick up some themes. I think the theme that jumps out at me here I think a lot of banks on here. A lot of smaller banks, ACNB. I have no idea what that is. Sierra Bank Corp. LCNB Corp. I've never heard of half these names, but okay, that's fine. And if nothing else, it gives you kind of a sense of what's happening in the marketplace. I'm seeing some, biotech and small pharma names in here. A couple small energy names, Bonanza Creek. So it's interesting. You can pick up on some themes. So take a look at that screen today. Let's look at the sector tracker now, moving to the last 5 days. Energy, speaking of, top of the list. Fins, there you go, cyclical. Comms and it's just a good looking board. Good looking board. All green, right? Start there. That's good. Right. And then look at the composition. In particular, look who's at the bottom. I've said this before. You should all be pros at it by now. Look at the bottom of that board. Staples, REITs, utilities, healthcare. Okay. Staples, REITs, utilities, all traditionally defensive, lagging. Healthcare has defensive properties. It's got its own idiosyncratic things going on right now. But for all intents and purposes, if you're bullish the market, this is a great board. I think that's a great board. Cyclicals and leading, secular names doing what they need to do, all while your defensives lag. That's a great board. Industry in focus, innovative tech services, past 6 months, massive outperformer, 30%. Power bar ratio, strong, looks at future potential. 13 to 7, bulls to bears, ranked 18 of 21. Down 1 slot. iCore, ICHR, TDC, Teradata, and Alphabet. I'll never call it Alphabet. It will always be Google to me, GOOGL. Our holdings in this fund that is textbook uptrend. I've said this before. I teach a technical analysis class to college students. And when we talk about trend, we talk about the definition of an uptrend characterized by generally rising prices with higher highs and higher lows. This is textbook. What can we say about this here in the near term? I mean, other than it's extended to the upside and overbought. Massive outperformer, bullish rating, strong trend, bullish power. I mean, you see it. It's there for you. It's there. It is. Line it up. It's just extended in the near term. Yesterday's movers and shakers, gainers and losers. Leaderboard is pretty much all energy except for NVIDIA. I don't know what popped NVIDIA yesterday. It was interesting to me. It's been in the range for a while. Pop was compelling. Did not get it out of the range, but okay. Everything else is energy related. Oxy added to the USA 1 list of BAML. That's Bank of America Merrill Lynch. Everything else just kind of going along for the ride with the energy complex. So we're not really going to beat that horse here. You've seen it. We've talked about energy. Last week, we talked about energy. Said it was oversold, presenting an opportunity. Loser side of the board, a little more going on there. Hasbro earnings, HAS down 4.25%, ALGN down 2%. Didn't see anything company specific there. Same with ES, nothing company specific. SBAC, SBAC caught a downgrade at JP Morgan. That stock down 2.5%. And Kansas City Southern, KSU, laying out some data on traffic. Street didn't like it, down 2.5%. Here's what I'm talking about. And remember, it's Tuesday, so it's relative day. On relative day, we look at sectors relative to the market, relative to the S&P 500. And here's what I'm talking about when I say cyclical and secular, right? The bottom of the chart here is financials relative. Could be turning a corner here. Could be turning a corner. Take a look at a 5-year chart of XLF. On the verge of a big breakout. What would that say? What would that do to the market? What would that do to your view on the market if financials got in gear? I don't know. It's a bullish data point, in my opinion. But at the same time, you still have your secular leader like tech or even comms, parts of discretionary, continuing to outperform as well. So to me, it's a healthy sign. It's a sign of that broadening out. Remember, you've heard me say it before. I'll say it again. A big part of the bear case up until probably 6-8 months ago was narrow leadership. Market was being pulled higher by a handful of names. That's no longer the case. The leg of that stool has been kicked out. That leg of the stool has been kicked out. There's no two ways about it. It's been kicked out. You can't even argue with it. It just is. Look at breadth metrics. Look at all the stuff that we talk about constantly. The areas of the market that are going higher, the areas of the market that are leadership. Just look at our power bar ratios every day. Go back to that power bar ratio for IWM. You're trying to tell me that leadership is narrow? When you have a ratio like that? Absolutely not. You've seen it. It's there. To be bearish is to be dogmatic at this point. Or to stay bearish, I should say. To stay bearish. If you've been bearish for months, it's just dogma. I don't get it. It's all playing out while these defensive groups remain under relative pressure. Look at the utilities at the top of the list. Plumbing, new lows. What about REITs? Counter trend rally last week, short-lived, turning lower once again. How about staples? Just bouncing along on the bottom there. All of these below their declining 200-day moving averages by definition in long-term downtrends. So defensive areas of the market lagging in an up tape. That's a bullish data point. Now, could all this change tomorrow? Of course it can. We'll identify the trends and see what's going on and move from there. But I think it's hard. I think it's hard to stay bearish here. Identify the leadership in the marketplace that's out there. Robot is a new thematic ETF. Obviously, it's been around for a while, so it's not new in the sense that it's new on my radar screen. I don't know how. I was looking at something else, BOTZ, B-O-T-Z, but I came across this one today. It looked compelling. It was trading at all-time highs. Take a look. ROBT, First Trust, NASDAQ, AI in robotics. Uptrend, above the 50, above the 200. RSI confirming trend. Look at the scooter, massive outperformance, 95.6 scooter score. Hard to argue with that from a relative perspective. So for those who think thematically, interesting idea. Or maybe you want to drill down for individual stocks, check out their holdings perhaps. It's going to wrap us up for today. Have a great day, everyone.